Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a fantastic Friday. The weekend has arrived, so I hope you've got some nice things planned ahead of you for the weekend. Today, we're going to be diving into our cryptocurrency market update, where we not only look at the crypto space, we look at markets as a whole, the traditional markets. Today, I want to talk to you. Today is quite a significant day in the sense that it's the US non-farm payroll, where they release data related to jobs. How many jobs have been created, how many jobs have been lost, what the unemployment rates are, etc., etc. Now, this, of course, has an effect on the economy, and based on what comes out of this data, it's not out yet, it will kind of sway the markets one way or another. So, for example, if we've done very well in increasing the number of jobs, you'll see markets uptick. If it's a miss and we don't quite see that data revealed that we want, what they're kind of estimating. They're estimating that we've done quite well. We're going to get into that. We are, of course, going to be looking at Bitcoin. Bitcoin potentially could be in some sort of a falling wedge that it may break out to the upside of. Ethereum. We're going to take a look at the traditional markets, the FTSE and oil, which has seen a huge downside recently. And this is all tied in with the kind of inflation narrative. Jerome Powell, of course, to quickly recap, we've covered in the past couple of days the fact that Jerome Powell has came out and said that he wants to start tapering and dealing with inflation, tapering things like buybacks of stocks, and also to kind of retire the word transitory in relation to inflation, because it's somewhat here to stay now. It's always been here, but it's just been ramped up with the whole global events that have took place over the past 2 years. And then, of course, markets are also a little bit scared and skittish due to this new variant and nobody really being certain with how this is actually going to affect the economy. I'll just let my cat out. So there's a lot going on. You can see this in markets. I mean, if you look at the FTSE, it's very jittery. It's not really decisive, and it's kind of waiting for a green light. And the non-farm payroll, even though the FTSE is a UK index, you know, the S&P saw quite a lot of strength. Expect strength if the non-farm payroll comes out and we do see the number of jobs added that they're expecting in November. This is going to see the S&P uptick. It will also see the dollar show quite a bit of strength, which typically is bad for Bitcoin, but it's not at the same time, because Bitcoin's kind of very tethered to your traditional markets. And if they're not having such a good time due to global events, global finance, etc., etc., then it will be kind of echoed within the crypto space. So you could see a run here if non-farm payroll data comes out in the kind of favor of the fact that the economy is looking very strong and we've added a load of jobs and decreased unemployment. So that's what we're going to get into. Also, very quickly, remember how there was loads of articles surfacing that India were going to ban crypto? India to regulate, not ban crypto, cabinet document. This has happened so many times. You know, I honestly think there needs to be some sort of a system where we hold media accountable for inaccurate reporting, and that includes myself, because it's just insane how much FUD can be put out there without any kind of repercussions. And some people are basing their investment decisions on some of these news articles, and it's very catastrophic, and it really sickens me to see it. Which is why this channel hopefully will keep some of you right. So it's turned out that India aren't actually going to ban it. They're just going to regulate it, probably. And of course, this is in light of their CBDC announcement. They can't really have too many competitors with a competitive advantage, so they're going to try and constrain that. So let's get into it. Markets are looking a little bit more chipper today. This is really what you want to watch when the non-farm data, payroll data actually comes out for the US. Bitcoin confined to familiar range as stocks rise ahead of payroll data. Payroll data is forecast to show the US economy added 550,000 jobs in November after 531,000 additional in October. This really represents that the economy may be strong. Here they've got this kind of falling wedge structure. We actually haven't got the falling wedge structure. We've got this kind of a rising triangle in our kind of Bitcoin play, and we've got these Fibonacci retracement tools, and we're showing you the similarity between what took place over here and what is currently taking place, and why there's a good probability you're also going to see upside momentum. Let's see if we can maybe draw that falling wedge to see if it is really present. He's on the daily. So something like this is what this guy is potentially looking at. something like this for Bitcoin that potentially could see us break to the upside. We've had lots of falling wedges throughout this whole period for Bitcoin, so there is a good chance of that. You are also very close to the bottom of this ascending resistance that has caught you as support once. Likely, if you roll again, could catch you, and that could be the actual catalyst. So we're going to watch what comes out. I may update you guys later, but this is also something, as well as your FTSE, as well as your kind of traditional world assets, that you need to pay attention to as a crypto investor to kind of get a good gauge of where the market is going in the short term. You also want to pay attention to key data points like this. Bitcoin continues to trade in a familiar range as traditional markets exhibit. Improved risk appetite, with investors eyeing the release of the US monthly employment report. The top cryptocurrency was trading near 57,000 at press time, extending a 3-day long consolidation in the range of 55,000 to 59,000. So we know this. We know why we've been in this range. It's due to markets being a little bit sort of stally across the board, really, guys. Ethereum's actually done quite well. Ethereum, lots of articles going on and about the place in relation. And it's a very interesting point that Ethereum may be extremely undervalued in relation to Bitcoin, and actually may be more valuable than Bitcoin. I happen to agree with this based on how what you can do with these individual cryptos. You know, Ethereum is a lot more. You guys know I'm a massive Cardano fan, but I'm not a hater on any crypto out there. You know, I hold Ethereum. Ethereum is a lot more usable than Bitcoin, and I think that's really what's going to drive value. Are these things used, and in what kind of a way? And Ethereum can really do the things that Bitcoin can't. There is that kind of question about security. Because Bitcoin is it's very good at being a secure blockchain in the way that its mechanisms work, whereas Ethereum, you know, you can do similar things. So there might be a trade-off there, but lots of people saying that Bitcoin will flip Ethereum. I think in the future you will see this. I actually think you'll see something like Cardano potentially flip Ethereum and Bitcoin, or some of these third-generation blockchains. Certainly if Ethereum don't get their act together with the gas fees, etc., etc. But this is all down the pipeline. I don't think this is going to happen anytime soon. I think Bitcoin's going to maintain that #1 spot for quite a long time. So let's divulge into this, continue into this. European stocks traded higher, tracking an overnight bounce on Wall Street, which saw the S&P 500 index surge 1.4%. The traditional stock market is so boring compared to our market. I mean, I really have got to say that. However, gains were moderate. At best, the something concerns dominated the sentiment. Australia reported the first Omicron variant early Friday, despite having travel restrictions in place. The US also registered the first case earlier this week. Now, there's lots of... there's no decisive data on this new variant. What there is a lot of uncertainty. Some people are saying it's not going to be anywhere near as bad as it was first made out to be. Others saying that we still don't know. So until we get some sort of a decisive data on that, tied in with everything else, like the general health of the economy, you know, let's say it comes out and it goes, okay, well, it's no more harmful than anything else. You know, that would kind of give markets that green light and kind of take them out of this stall zone. And with something like oil, which is very similar to Bitcoin in the sense that it's a kind of an inflationary asset, if you will, it kind of hedges inflation quite well. The reason you've seen this is because they've kind of had to rein it in, because if these things continue to run and kind of go wild, they really would lose control of it. So they have to kind of put events in place. If you see this non-farm payroll come out and it's actually not as positive as it's been made out to be, certainly before the data actually gets released, that also could be a good thing for Bitcoin, because that would show dollar weakness, and it would really highlight that you know, the economy, and it would quash the whole narrative that they're going to have to taper inflation, because they can't taper inflation and stop printing money and issuing stimulus if the economy isn't doing well, because you'd see a decline, and that would be more detrimental than them continuing to print and kind of covering up inflation. So there's so much going on in the world right now. We're trying to cram it all into a video just before I go to the gym, hence my sporty hoodie. So I hope you guys are appreciating these updates. Let's continue, and then I'm going to wrap it up, guys. The US non-farm payroll data scheduled for release at 13:30 UTC on Friday is forecast to show the world's largest economy added 550,000 jobs in November after 531,000 additional in October. The unemployment rate is expected to fall from 4.5 from 4.6, while the average hourly earning is forecast to increase by 0.4% month on month, according to the FX. Let me just make a very quick statement. On this channel, we're very zealous that inflation is a tax on everybody and affects the poorest in society the most. This hourly earnings is really applicable to some of the poorest people that sort of live month to month. 0.4%. How dare you, when you've inflated the monetary supply, and act like that is anything to brag about? That really frustrates me as somebody who's been on the, certainly growing up, was on the opposing end of economics, or the adverse end of economics. You know, these things really hit home for me because I know just the people I have the most respect for in life. It's not the billionaires or the millionaires. Okay, what they've done is quite impressive. It's the people that get up every single day to go and do a job that they hate, where they get underpaid, underappreciated, just to put food on the table for them and their families. They're the people that I have the most respect for, and it really winds me up when I see 0.4% like that is anything to gloat about. Anyway, that being said, that little rant out the way, the dollar could resume its recent uptrend, putting downward pressure on Bitcoin and asset prices in general if the payroll data bolsters bets of faster normalization of monetary policy by the Federal Reserve. So, of course, if they stop what he's really talking about here is if they stop actually causing this inflation, this stimulus, then that would see strength for the dollar, of course, because there'd be, a less of a tap. The tap would get sort of turned off a little bit, and it would hold its value a little bit more. And also if they up interest rates and everything. But there's lots of ifs, buts, and maybes. If, let's say, for example, the variant turns out to be horrific, that they couldn't turn the tap on inflation because they'd see a real downturn across the board. Also, if this comes out a lot more negative than they'd expected, they're going to have to do something to bring it back up to where they're expecting it to be, and that would be to continue to print money and pump it into the society that they're choosing. So another 500,000 plus increase in the headline numbers, a decline in the unemployment rate, and an increasing hourly rate earning should all keep the US short-dated US rates supported on views that the Federal Reserve could exit, lose, etc., etc. So it goes on. Thanks to inflation running hotter than expected, fears of faster Fed rate hikes have gripped markets in recent weeks. We've been speaking about it every day. On Tuesday, Fed Chairman Jerome Powell retired the word transitory from inflation discussions. Other countries are following suit. We told you about the European Central Bank and Christine Lagarde yesterday, and said that central banks might consider speeding up unwinding asset purchasing in December. This would sort of have a detrimental effect on markets as there's a whole liquidity asset taken away from them. On Thursday, Cleveland Fed President Loretta Mester told the Financial Times that the something variant could fuel soaring inflation in the US by further pressure. So this is what we want. The most bullish event for Bitcoin was what took place in March 2020, because this ramped up the money printing and really highlighted why Bitcoin has its value. I think I'm going to leave you on that note, guys. This was quite a long one. There was lots to cover. So watch the non-farm payroll. We may update you later. If you guys want to see that, let me know in the comments, where we give a more comprehensive overview of what this data has revealed to us and how the economy may react. But we're seeing, you can already see a bit of a buyback here. This is just so indecisive, the FTSE. I'm going to have to stop watching it. I will watch it just to kind of update people. It is a very good indicator, but it's rather frustrating to watch, certainly for people that are involved in that market. I'm personally not. I'm all in crypto, baby. But, I know a lot of people that are involved in all of these markets. So everything's seeing a bit of an uptick. I suspect if the data is good, you're going to see the S&P do very well. The dollar will probably do quite well. But this doesn't necessarily mean a bad thing for Bitcoin, as Bitcoin is going to also get that green light that it's been waiting for, along with the rest of the market. I'll update you on my usual cryptocurrencies later. I'm going to love and leave you on that note. If you've enjoyed the video, a like is always appreciated, so as a comment. Remember, we do have a link to the Discord in the description, and I look forward to seeing you all in the next YouTube video. Thank you very much for watching, ladies and gents.